Hello everyone. Well, the dollar continued its ascent yesterday despite more disappointing news on the U.S. economy. Following last week's lower than expected new home sales, yesterday's durable goods orders were also disappointing. But the dollar rose against most currencies except the yen. This was probably due to safe haven flows in light of the increasing tensions with Syria. That would explain not only why the safe haven yen rose, but also why dollar Swissy was unchanged, as the Swiss franc is another safe haven currency. And I can tell you that in case of war, there are few places better to be than Switzerland. Until recently, every house was required by law to have a bomb shelter in it. And everyone was required to keep 6 months' worth of provisions in their bomb shelter. I know this because I used to live in Switzerland. My experience was that most people just kept 6 months' worth of wine in their bomb shelters. That seemed to be the main use of these very expensive rooms with enormous thick steel doors in everyone's basement. In any event, the continued risk aversion in the market put more downward pressure on the emerging market currencies, which mostly fell against the dollar. The dollar's resilience in the face of this negative economic news really impresses me. There seem to be two schools of thought in the market: those who expect the U.S. economy to continue to improve and so dismiss these recent weak economic indicators as just statistical noise, and those who expect growth to remain tepid and see the recent data as confirming their view. So the gyrations in the U.S. bond market reflect the tug of war between these two views, and it's the bond market really that's driving the dollar nowadays to a large extent. I hope that the revised second quarter U.S. GDP figures, which are due out on Thursday, will help to settle this argument for the time being. So those are some very important data to look forward to. Market expectations are for the GDP figure to be revised up, which I think will confirm the views of those who are optimistic on the U.S. economy and will therefore underpin the dollar. But I doubt whether that will bring any confidence back to the emerging market currencies. On the contrary, confidence about the U.S. economy means more confidence about tapering off, and that just means continued pressure on the emerging market currencies. For today, the IFO index for August is the main feature. This is already out at the time of recording. The three main indices for Germany were not only higher than last month, but they also beat all the market estimates. So better sentiment in Europe's largest economy may support the Eurodollar today. In the US, the S&P Case-Shiller House Price Index is expected to show a rise, which could offset some of the recent pessimism towards the housing market. Finally, the Conference Board Consumer Confidence Index for August is expected to be slightly lower, in line with the drop in the preliminary U of Michigan survey for August. But within the Conference Board survey, market attention will focus particularly on the jobs plentiful and jobs hard to get indicators. Those will be one more input into the FOMC's decision on whether to begin tapering off quantitative easing. This is Marshall Gittler, head of Global FX Strategy at IronFX, wishing you solid trading.